As the Fed kind of gets to that point where they say, okay, we're going to start to that, reduce the amount of hikes we're doing. We're going to go to 50 basis points, then 25, then maybe zero. That's all gravy for gold, right? Gold wants a Fed that is either zero hikes or dropping rates. And I think what you'll see is an economy that still has decent inflation, which is going to keep the pressure on gold to the upside. But the Fed won't be able to hike much more because the economy is going to slip into recession. So I'm right there with that, actually.
Okay, so gold, do you have a price target for gold next year? Any numbers you can lay out there as you look at the charts?
Yeah, absolutely. So let's go right into some charts here. Let me share my screen here so we can actually take a look and see, and we'll take it step by step. So the beauty of it is that, in all fairness, gold it wasn't like it was up 50% for 2022. But the crazy thing about gold is that if you compare it to the S&P or to Bitcoin, that was the place to be in 2022, right? So it's done really well. What I love is the recent price action. And what I want to show you guys is take a look at this. So you had this little W bottom pattern. You had a breakout, a retrace to that level, and then it went up to the next level of resistance. You can see this top here and this area right back here. Now, my guess is that you'll actually see another breakout to the upside here when gold, even if gold just stays at flat, because they had to pay their labor more, their costs for their equipment went up because of inflation. They were really getting squeezed in terms of their profitability. Now, if you get inflation to kind of stall out and maybe not go up anymore, this is where a rising price in gold can really help them do well.
Gareth, for GDXJ, which is more like a mid-cap miner, it's the closest thing we have to kind of see where the junior miners are going, but we need speculative dollars to flow into these stocks in order for that to move. Could you give me an analysis of GDXJ and also talk about where our speculative dollars going to flow into next year?
Yeah, so here's your GDXJ chart. And you're right. I mean, if you look back, you go back to 2020, that was really the high on GDXJ. It's kind of been in a downtrend for a long period of time here. A couple things that catch my eye here. Number one, we look at the lows from 2021 and notice how they all align. So what that tells us is that this is a very important support level. And if by chance, I don't think it gets back here, but if it did pull back down to that same line, and so this is the first bear market in Bitcoin where the Fed hasn't been printing money, which means it probably needs to do even more downside than past cycles. Past cycles were 80 to 85% decline. We haven't even quite achieved that yet. So I think on a stopping point, that 18 to 20 was the first stop. I think there'll be another bounce around 12 to 13. But I think you have to look at, the 9,000. You want to get to max pain on Bitcoin, just like any cycle. It has to get to max pain. And that probably is when it breaks 10,000. You'll finally get some sort of bottom there.
So we're looking at a stair step down on the Bitcoin chart here. Are we going to have like a spike low to get to 9,000? And what might be that event if we do have a spike low?
Yeah, so I do think that it'll get down to like close to 10, and then you'll have that sharp dip below 10, which will wipe out a lot of stops. There'll be a lot of stops in that vicinity. And I think that'll come with either a shock on regulation, right? The announcement of regulation, which I actually view to be a very, very positive thing for crypto. But I think initially it's going to shock most crypto investors. They're going to say, oh my gosh, these cryptocurrencies have to do X, Y, and Z now. Oh my goodness, can they afford to do that, right? Whether it's audits or this or that. And I think that's going to initially panic, and then you'll see big money come in and scoop that up. So I would say it's most likely regulation. I think to me, FTX is like a Lehman Brothers moment in '08. And what's interesting about Lehman Brothers is the S&P from that date fell for another 5 to 6 months. It fell about 40 to 45%.
You mentioned at the outset that volatility will be a thing next year. Are you playing the VIX at all, or do you expect to play the VIX?
I do. I've been eyeing the VIX here. I just want it to get down to so I think everyone expects it to kind of hover around 20 and then move up. I think by end of year, and if we continue to sell off into the Federal Reserve meeting next week, I think you might actually get an end of year rally, and that could push the VIX maybe down to like 17 or so, down in this lower range. And then that's where I'm looking. So I'm trying to thread the needle on that because the VIX is so volatile. I mean, we know how quickly it can swing back and forth, but I am absolutely looking to inch into the VIX. I just need it below 20 towards that 18, 17, 16 range at that point.
Are there any good energy trades that you're eyeing up?
Wow, that's a good question. So I've been a bear on energy all year long. Again, to me, it was a no-brainer that oil was not going to go to 200 like everyone was saying. And the reasoning behind that was it was very macro and very simple to me. When we saw Russia invade Ukraine, everyone said, oh my goodness, oil's going to go to 200 or at least 150. I looked at it and I said, wait a minute. So this is going to put stress on the overall economy. Then you have the Federal Reserves around the globe hiking rates, which is going to slow the economy.
What about commodities in general? Are there any commodity chart setups that you really like? Because you've talked in the past on this show how you like some of the big miner setups and also the commodity complex. Any specific commodities, though?
Yeah, so specific commodities, definitely gold, definitely silver. Silver and gold are kind of my two top plays. I'm trying to be a little bit more careful with the coppers and the oils, the ones that have that industrial side to them where it's more of a demand growth story. I think you might get a bounce as as China kind of reopens and gets away from this COVID zero, because I think their economy could pick up. But I do think that, again, the Fed just being so hard-nosed on raising rates. And remember, it takes 6 to 9 months for a rate hike to filter in the economy. So you could argue that we haven't even seen the impact of the last 275 basis point hikes, let alone the likely 50 basis points next week, and then maybe even further out from that. So I think that the economy is going to slow, which makes me really shy away from the coppers and the oils unless they're swing trading opportunities.
Last question. You're a trader, so you make money on the way up and the way down. Where do you see the best opportunity to make money on the way down in 2023? Gareth, thank you for your 2023 outlook. Remind listeners that aren't familiar with your work, what do they find at inthemoneystocks.com?
Absolutely. So at inthemoneystocks.com, I have a service called Verified Investing Alerts. I do a daily video, usually 15, 20 minutes a day, hardcore technicals going over all the inside action in the market, in stocks, commodities, you name it. And then I also put out trade signals. So if I see a good trading setup based on technicals, I'll give you the exact entry price, stop, target, everything you need to kind of follow suit and trade it.